What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw another volatile sell-off across the stock market indices. How much deeper will this stock market correction possibly go? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Well, September is finally over. If you remember at the beginning of the month, I nicknamed this month Septembear, and I did tell you that it was likely going to be very volatile. Well, this month did not disappoint, and as you can tell from the price action, we see SPY getting flushed out today, going down 1.22%, and we did finish the month near the lows. So anytime you get a very bearish looking candle like that, you always have to wonder if the stock market correction is going much deeper. And typically speaking, corrections are usually around 10 to 15%. So from the all-time highs to where we closed today, we are down just about 5.3%. So as you can see, there's still plenty of room we could go to the downside. If I switch this over to a weekly chart, you can see that we're currently trading below the weekly 20 simple moving average, even though we still do have the full bull trend. So tomorrow, even though we finished out the month of September, we haven't yet closed the candle for the week. So the first day in October could set the tone if we did get a bounce and if we can close this week back over our 20 simple moving average. We saw it last week with the wick below, meaning buyers were stepping in, driving the price action back above that level, which is right around SPY levels of 435. On the monthly chart, we did close the candle today because the month of September is officially over, and we can see we're currently sitting right on top of the 5 EMA on the monthly chart. So from here, we could get a bounce, but we don't want to just say the stock market correction is over as long as we still have this downward trend on our daily chart. So remember, it's a downtrend until it's not, and every bounce that forms a lower high is just going to get sold into and shorted into at resistance as we continue through the stock market correction. So we're not out of the woods just yet, and for all we know, we're going straight from September right into October. So from these levels, remember I had that critical support right around 433, and we decisively closed below that level today. There was another level of support right around 430, and we closed below that level as well. And all we have going for us currently is this potential wick, which could be a double bottom on a smaller time frame. If I switch this over to a 1 hour chart, you can see this is somewhat of a double bottom if we do start bouncing from here, but we would need to take that neckline out all the way up there at 444.5. So we have a long way to go to see if this is truly going to be a double bottom. So it's something to pay attention to, but not put too much weight on because we still have tons of resistance before we can confirm that as a double bottom. The other thing I want you to pay attention to on the daily chart is that we're still going lower on increasing volume. Anytime you're going lower on increasing volume, you know it's the real deal sell-off, and that tells you there's a lot of volume behind all of the selling, which tells us we could be taking that elevator down. Doesn't mean we have to go lower. It definitely means we most likely will go lower. So even if we do get a bounce, watch for that scenario that we get rejected and continue lower. That level at 425 and 419 should be strong support. But if we break below 425, it's almost a guarantee we're going to 419. Below 419, we could still go lower and close the gap at 411, but we still have tons of support above those levels that we should pay attention to first. We closed just at that lower Bollinger Band, and as you can tell, those are expanding, and we do have a lot of bearish momentum building up with all of the negatively sloping moving averages. Now, the good news for the bulls is that the bears did leave this gap above, and that's sitting right there at 441.8. So we'll have resistance levels at 430, 433, 436, and our 50 EMA at 440 before we can close that gap at 441.8. So there is going to be a ton of bears raiding SPY because we do have so much bearish momentum, as you can tell from all these moving averages that are negatively sloping. So you can't just get overly bullish on this market thinking that we're going straight back up to all-time highs. While it is possible, it's not likely because we have a lot of bearish momentum, and there's going to be a lot of resistance that the bears are going to sell and short at. So remember, the trend is down until it's not, and we really need to start breaking above at least 440 to 441 before we can start snapping this downtrend and turning it into something that could be a little more bullish. So support levels to pay attention to are 425 and 419, and below 419, look for the gap close at 411. On the NASDAQ 100 QQQs, we were down 0.37% today, and we did get another daily close below that support level at 360, which increases the probability we're coming down to that support level at 354. Below that, we still have a support trend line right around 353, but below that, the floor falls out and we could be going much lower. We're going down on high volume, but not increasing volume from a couple of days ago, but it's still a sell-off and we still do have a gap above at 368. That's also a strong resistance at the 50 EMA, so watch that gap closely if we can start breaking back above some of these resistance levels at 360 and 365. Just like SPY, we're developing bearish trending and it's a downtrend until it's not, and we definitely see a lower low forming here, which means we could see another lower high forming next. So now that we're below 360, it could be very likely we're coming back down to 354 before we see that bounce. We're starting to get to the point where this dead cat could be due for a bounce, so don't get tricked if you do see a bounce because it could just be another bull trap. Remember, we need to break out, otherwise we're coming back down towards support and we could lose support and go much lower. However, if we get a dead cat bounce and that dead cat gets another life in an attempt to break out, we could get a dead cat bounce that turns into something bigger and we could go back into a bull rally. So this is the price action you need to watch, otherwise it's just a bull trap and a dead cat bounce if we get rejected at that resistance. So pay attention to the price action because it will help you navigate through this stock market correction. Usually stock market corrections are long and drawn out and they will wear out the bears and the bulls alike. Don't just think because the trend is down it's extremely easy to short. You still need to be disciplined and you still need to make sure you're shorting at resistance and buying at support. There's no easy way out in the stock market and you still have to be a disciplined trader. On the Dow Jones, we had a huge bearish engulfing candle today, going down 1.59% and closing below that support level at 339. Our next level of support is 336.7 and below that we're very likely closing the gap at 332. Look for upside resistance at 339, 341.8 and our 50 EMA at 348. As you can tell very clearly from this chart, it is a very strong downtrend. So don't get overly bullish when all of the indices are in a downtrend and we see price action making lower lows. On the Russell 2000, we were down 0.94% today and we did close below that support level at 219, which means we could be coming back down to support at 215. However, if this is going to be a false breakout, look for an immediate retake of that support, and then we really need to see the Russell 2000 closing above 224 and breaking out above 227. Otherwise, we're very likely coming back down to that support level at 212, and if we lose that support, we could be going much lower. On the ARKK ETF, we were up 0.75% today, but this is really nothing to be bullish about because we do have the full bear trend with price action below all the moving averages. Remember, this was more than likely a confirmed double top, where we got to that resistance level, got rejected, and broke below the neckline, which does mean our price target is all the way down here at $102. So look for a potential lower high, get rejected at resistance, and then continue to march down towards that price target. ARKK is bearish until we can break this trend and close back above 120. If ARKK is below 120, look for lower highs and lower lows as it continues to march down towards 102. We also have support at 109 and 106, but don't just assume those levels of support are going to hold up. Watch for the confirmation of the price action to bounce off of those levels. On the VIX, we were up just over 2.5% today, and we see the VIX closing over 23 yet again. We still have the full bull trend, and we still have the VIX trading above 20, which tells us we're still going into this deeper stock market correction that by now you're well aware that we're in. Remember, the confirmation of the correction came when we first got the VIX closing above 23, and this was just a bull trap when we saw the VIX closing below 18.2 just for that one day. So volatility is back until we see the VIX breaking back below 20 and closing below 18.2 for the second time. As long as the VIX is trading above 20, be cautious of a deeper stock market correction and don't get stuck in a bull trap. If we see the VIX closing below 18.2 and heading back down towards 16, we could go back into a bull market and break the downtrend. But wait for that confirmation of the price action to let us know we're in that condition. On Bitcoin, we're currently up over 5.25%. And this is actually a very bullish indication because we see a very bullish looking candle. Could Bitcoin be hinting that this stock market correction is almost over? It is a good measurement of risk on environment. And right now we're starting to see Bitcoin looking pretty bullish, breaking back above that resistance level at 43,000. It's way too soon to celebrate for sure because we still need to break back above 45,000 and get a daily close above 48,000. However, this is definitely a bullish looking candle. And if we can start breaking out of some of these resistance levels, we could break the downtrend and start going back into a bull trend. Still watch that critical support at 40,600, and below that watch for strong support at 37,500, and below that we're very likely coming back down to 30,000. If we can break out above 48,000, we could start breaking out to a brand new all-time high this year, but we need to wait for that confirmation price action and we need to get a daily breakout above 53,000. On Amazon, we were down 0.5% today, and we see Amazon breaking below that support level for the second day in a row at 33.11, which increases the probability that we're coming all the way back down to 31.85. Now, we still could have support right around 32.85 where we found support in the past, but that really isn't a very strong support level, so don't put too much weight on that level. Right now, if we're below 33.11, just assume we're going back down to 31.85 and wait to get bullish until Amazon can reclaim 3,300 and hold that level as support. You still have strong resistance at 3,400 and the gap close at 34.52. Tesla stock was down 0.75% today, but we still see Tesla looking bullish with the full bull trend and holding up above all the moving averages, and we still see the price action above two of our most critical support levels at 755 and 732. As long as Tesla is above 732 and you have the full bull trend, you can remain bullish for a price target of 825. If we break out above 825, we're very likely retesting the previous all-time highs. Look for possible support at 765, 750, and 732. On Apple stock, we were down 0.93% today, and we see Apple stock closing below our support level at 142 yet again, which increases the probability that we're coming down to close the gap at 137. This could still be a false breakdown, but it's looking more and more likely like it's the real deal. So watch for that support level at 137 for that gap close below. If we can start breaking back above 146, we will very likely break the downtrend, and then that gap could remain open. So right now, it looks like the gap is likely going to get filled until we see Apple breaking back above 146. On the financial sector, we were down 1.57% today, and we see the financials closing back below the 50 EMA, but we still do have the full bull trend. This could be an overreaction in selling before another big bounce. Otherwise, we could lose the full bull trend and go back into a downtrend. Right now, this could go either direction, but the trend is bullish, so I have to give benefit of the doubt for the financial sector bouncing from here. The industrial sector was down over 2% today, and we still see the industrial sector looking like it's trying to go into a bear market. We have price action below all the moving averages, and we do have the full bear trend. The healthcare sector was down 1.23% today, and we see the healthcare sector looking very weak, like it's rolling over and getting ready to die. All of our moving averages are negatively sloping, and our price action is below all the moving averages, so we could also be seeing the healthcare sector getting ready to go into a bear market. The energy sector was down 1.5% today, and we still see the energy sector looking very bullish. We do have a gap to fill below, but we're very close to regaining the full bull trend, and we could see the energy sector getting back on the bull and getting ready to break out to a brand new all-time high. So jumping back over the S&P 500, remember that this is definitely one of the most volatile months of the year, and that's why I did nickname it Septembear. If we're going into another volatile month, we could see October, but right now, we have to assume that the stock market correction is going deeper until we break the downtrend. There's nothing on these charts to get bullish about, and we continue to blast through support levels as we build up bearish momentum. So don't get overly bullish. You can accumulate for the long term, but if you're making trades, make sure you're being disciplined and you're buying at support and selling at resistance, or shorting at resistance and covering at support. Be disciplined and be patient, and only buy and sell off critical support and resistance levels. Remember that I do have my own trade alert service called BANC Trade Alerts, and it only trades TQQQs, and it does very well in volatile markets like we're currently in. I'm currently running a 50% off promotion code for your first month, so now could be the best time to try out BANC Trade Alerts while we have this very volatile market. You can find out all of the details and how to join by clicking on the links in the description of the video. I also have the Stocks channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks channel trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.